We had a Kraken account opened up. Let's move into the deal close story of the week. And I'm really excited about this one. And I'm going to try to paint the picture for you. This is a gal who's in her 20s who bought Bitcoin at a very, very early adoption phase, somewhere for around $14,000 to $20,000. It was what her total amount in, but I don't know the exact number, except it was pretty much close to zero, right, when she bought it. And it literally went to $50 million, okay? And so about a month ago, she watched one of these masterminds and said, over the last 48 hours, we couldn't stop watching all of your content and learning all about the Deferred Sales Trust. And we've been trying to solve this because I have never sold one Bitcoin. In fact, she goes, well, actually, that's actually wrong. I bought it the first day. The next day, it lost like 8 or 10%. And I sold it. It was a very small part. But then I bought back in a couple days later, and then I have never sold since, okay? And she just slowly kept buying and buying and buying and buying, and never sold because of the capital gains tax. But the other part of it was she wanted to be able to retire from the corporate W-2 Google job, right? And she wanted to start another potential business and do some other things. And so for her, she's living in California, high capital gains tax. She found us and she goes, look, I have an outcome for the funds. I don't want to just sell it to defer the tax. I have a place that it helps provide some transformation for myself. And actually her business partner was like, they knew each other in college and were close friends and continued being close friends. So he had the business idea. She liked the idea. And guess what? They were able to sell 5 million to start. Okay. 5 million. So it actually basically matches our first DST crypto deal, which was Ethereum with Bitcoin that happened about 90 days ago. And that was 5 million. Okay. So she started. Now it's interesting. They both did 5 million. And part of why she did 5 million, because she's single. And if you remember with the DST IRC 453, 5 million per person per year on the DST, call that regular. Okay. Anything above and beyond that would be subject to an interest rate. So this first 5 million, although she needed about 6.3 million, this first 5 million is at a 0% interest charge from the government. And also, so it's been about, from the time we first talked to now, it's been about 30 days. And we closed it as of about a week ago. So in between that process, she also had to overcome, of course, is it legal? Does it work? What's the track record? The security of the transfer. She had it in a cold storage. We had a Kraken account opened up. We were able to share the 2FA codes to make sure everything was seamless there and transparent. She talked with the bank. High level of due diligence, very sophisticated and smart. But she got comfortable with it, and we just closed. All right, everybody. Hey, welcome to another week of the Deferred Sales Trust Capital Gains Tax Crypto Mastermind. I'm excited to have you here either for the first time or as a repeat attendee. My name is Brett Swarts. I'm founder of Capital Gains Tax Solutions. We're very, very passionate about all things capital gains tax deferral when it comes to selling highly appreciated assets, and that includes real estate, it includes cryptocurrency, it includes businesses. As you saw in that video, that is for a client of mine who was struggling with capital gains tax and wasn't sure how to sell and wasn't sure how to start her next business dream without having to pay millions of dollars in capital gains tax upon the sale of her cryptocurrency. And so we're here to try to make all things Deferred Sales Trust very simple for you. To try to make it kind of demystify this whole thing. It's perfect track record over 25 years, thousands of closes, billions under management, and as well tell like a deal close story of the week, and then answer any frequently asked questions or just some general questions from anyone in the audience or attendee, okay? And so I'm excited to be here with one of my junior / business partners, strategic alliance, all of the above, Pierce York. Pierce, how you doing today?
Good. Happy New Year, everybody. Excited to close out this chapter this year and get started on 22. How about you guys?
Absolutely. Absolutely. Doing great, brother, man. And Pierce, by the way, has officially taken over some of the podcast. I think he did about 50% of the episodes this week. He did about 25% last week. And so you should be seeing more and more and more of him. You can find him at Kingdom Luxury Realty Group. He's with EXP as well as I am. And he's focused on luxury real estate in the Newport Beach area. By the way, Pierce and I will be attending an event here in about 20 days in Manhattan Beach. It's going to be a conference I'll be speaking at, and we'll be talking about the Deferred Sales Trust together and networking with some commercial real estate syndication folks. And anyone who's in the Manhattan Beach area wants to check that out, you can drop us a line in the chat or email us, Brett at capitalgainstaxsolution.com to learn more about that. That being said, Pierce, you want to I gave a little bit about the vision, right? And a little bit about what we're here for, but it'd be good for folks to hear it from you as well. So what's the vision and what are you hoping to get out of today's mastermind?
Yeah. So the vision for the mastermind is to create a kind of like a community of people where we can kind of just express just different benefits of the Deferred Sales Trust and how it can help either you or your clients or maybe even your friends or, whatever the case may be, just get back time freedom, get back some really unique, options that you can do to invest and create and preserve more wealth. And also, make sure that we're doing it efficiently and effectively. This is kind of like a place where we can come and answer questions, talk to other people that have, kind of been through the ringer, and just familiarize yourself with us and with the process and the actual strategy.
Perfect. Well said, Pierce. Way to go. You're getting better and better at that every week that I ask you. So way to go, Pierce.
Keep throwing it on
excellent.
me.
So let's start. Yeah. The only way to do is jump on the fire and start recording, right? And start talking in front of folks. So, all right. So let's talk about the deal close story of the week. This particular gentleman, he's actually in the state of Colorado, and he's selling a business. It's a business sale. He's also into real estate, so he's like the opposite of cryptocurrency. But I think it's good to hear this from folks that are different asset types and different sales types and even different generations. He's older and had never heard of the Deferred Sales Trust, and he's actually a dual citizen of Switzerland and the United States, and so very, very good with his money, with building wealth, with business acumen. And he's learning about the Deferred Sales Trust for the first time, and he's faced with a huge capital gains tax on the sale of his business. And he's saying, Brett, I've never heard of this. This is my life savings. This is my retirement. This is my future. This is my financial legacy to pass on to my kids. And so, tell me about the Deferred Sales Trust. How does it work? How is it legal? How is it protected? And we closed on it. It took about, it's about a 40-day due diligence period for him. And he closed on his first part of his asset. It was a business sale that he's going to get multiple installments over a period of time, of which we can roll into the trust slowly, right? The cool thing about the Deferred Sales Trust is it doesn't have to be the whole enchilada all at once. You could start with an initial amount, like the down payment for this scenario. Was put into the trust, a couple $100,000, and then over the next 6 to 12 to 18 months, another 20-30% goes in, and then eventually the whole amount is in the trust, all tax deferred, versus him taking that individually and paying the tax. And so that helped him on obviously a couple fronts. One is capital gains tax deferral, but number two is being able to be flexible with the buyer, because certain buyers and certain businesses may or may not be financeable, right? Or as attractive as financing. So for a buyer who's coming in, if they can get the seller to finance it, and then they can go and improve the business or the property, and then they can get a new evaluation, and then they can refinance, okay, and then pay off the seller which they borrowed from. That's attractive. That also helps the seller potentially get a higher price. Now on his side, for our clients, we do recommend that if it is financeable and the business or the property has the ability to get new loans from a bank that's favorable, that you don't finance somebody, because typically the the buyer can obtain lower financing around maybe 3.5%, or even SBA financing where they can put about 10% down and get 90% financing, very low as well. So all of those things in place, you always want to identify what's the motivation for them asking for the seller carryback, and then what's the outcome to get a highest and best price for you. And sometimes the buyer's assumption is, well, I'm doing the seller a favor here because I'm allowing him to defer his tax. And if it wasn't for the deferred sales trust, that buyer would be right? But because of the deferred sales trust, we no longer need to do seller financing, unless, of course, it's advantageous to get a higher price based upon the unfinanceability of the business. So I'm going to bring this on full circle here. So he was able to do both. This is the good news for our client. He's able to do both, get a little bit higher price, a little bit better terms, still defer his tax. Now he's giving up some here in that in a deferred sales trust, typically about 8% net of fees is the return. Not a promise, not a guarantee. Whereas he's going to be lending back at about 5%. So he's losing that. The second thing is it's not diversified, right? He's counting on this buyer. He might have to foreclose and take the business back, right? So his funds are tied to this one person in his old business, and he's older. He's retired. This is why he's selling it. He doesn't want to have to take it back in a couple of years if the person doesn't perform, if they run the business into the ground or lower the amount. That's the part where traditional installment sales are blockbuster way of doing things, right? Because it puts more risk for you, the seller, right? It gives you less flexibility, really no diversification, no liquidity. Whereas in the deferred sales trust, we can sell, defer, get liquid investments, get active real estate investments, get new active cryptocurrency investments, new business ventures, hard money lending. Otherwise, we can diversify and get free from the asset that we just sold. And it's the same idea for cryptocurrency too. If you're selling Bitcoin or Ethereum or any other highly appreciated coin, that you're all concentrated in one single asset. And the same thing, you're also concentrated in one single market cycle, right? We know that cryptocurrency generally follows or at least Bitcoin, a 4-year kind of cycle where it's going to be the highs and the lows and the highs and the lows. Or if we kind of know that and we can kind of study that, then why not sell high? And why not get it on the sidelines? And why not diversify, defer the tax, and get into some other assets in the meantime? And then if the crypto crashes or goes down in half, or other coins are more advantageous. I mean, part of why our clients sell the Bitcoin, she does think it's going to go higher, and she didn't sell all of her Bitcoin, was she had a place for it, but B, she had a chance to dollar cost average out. It's the same thing with the seller of the business. He was able to dollar cost average out. So all that being said, I'm going to pause here. Pierce, I'm going to see if you want to pull out any golden nuggets. Also, Mitch, too, you're welcome to jump in. Anything that stands out or any questions you have on that deal so far, Pierce?
Yeah. So I was having this conversation with someone the other day about the seller carryback and just like some of the, just kind of like some of the drawbacks that I see. And one of the big ones that I wanted to highlight is that you might be able to foreclose like on the buyer, but they're kind of in control of the value of that asset. So if they run the property or they run that business like into the ground, like, yeah, you get it back, but it's like not worth what it was. It's a big risk that I think a lot of people kind of like overlook. And, when I was trying to like explain that concept to them, hey, like you are losing like all of the control over, the value of that asset. Like, wouldn't you rather like be done with that and not tied to that value anymore? And then they can do whatever they want. And you got your funds and you're cleared to go and still cash flow. So that was a little interesting nugget that you pulled out. As you were talking, that was reminding me about that. So I just wanted to bring that point up.
Yeah, let's dive into that for a second, right? Because to think about that, right? If you own a business or an asset, it's in a single location, a single property, or a single asset type, and you can now, what we're saying is sell that, become a lender, right? By putting the funds into the trust, get the full market value of that asset price, okay? And then the collateral can be secured against literally the biggest companies in the world. It could be Home Depot, Walmart, Google, Apple, right? In fact, we did talk with the gentleman this week. He's got Apple stock. He's got $25 million of stock, of which he has $20 million of gain. Most of it's in Apple. Okay. And that's great, right? I mean, if there's any one company to be in, those are some of the top companies. But that buyer, like Pierce is talking about, that's buying it, what is their financial strength in comparison to Apple? Like, it's not even close, right? What's the viability of them being able to pay you back, right? And so you really got to count the risk when you're financing a buyer and what that means for your lifestyle, your time, your energy, and your stress when it comes to having to foreclose and take it back. Likewise, we also say for highly appreciated cryptocurrencies, we're working with the gentleman right now. He's looking at the Deferred Sales Trust. He has over $200 million of NFTs. And we're working through this, and he has like next to zero basis. Like, it's pretty wild. And his goal is he thinks he's going to go to 300 million to 500 million. But part of the discussion we're having is, and he's planning on using the Deferred Sales Trust this year. He wants to get we always want to get a little bit more before we transfer in general, but he's planning on using it, and he's going to start with probably 10 to 20 to 30 to 40 million dollars. But the biggest thing was, we're talking about this and we're saying, hey, like, what's the downside like of this? Like, if you don't sell high, right? Or if you finance that buyer who may or may not be able to pay you back, like, think about and it's kind of the fear factor, like how would that feel versus just capturing what you have now, deferring the tax, and then being patient and waiting on the sidelines. You can always go back into crypto at a lower price or a business. And so it's balancing those two things of the upside. And with the Deferred Sales Trust, hopefully you'll see that it does for you, is it gives you the best of both worlds. It gives you the ability to sell high and buy low, right? Sell high and diversify, and not have to feel like you're caught in this huge capital gains tax, somewhere between 30 and 50%, depending on the state you live in, depending on depreciation recapture. So those are a few things there. I want to invite Piper. I see you joined us. Thanks for joining us. I want to invite Ryan and Vijay. Welcome, Vijay, and or Mitch, to offer any suggestions or thoughts or questions on any of what I just said. Does that make sense? Or what about what I just said doesn't make sense that you have questions on?
I'm honestly just being a sponge here. So y'all just talk amongst yourselves. You're blowing my mind. So I promise I will be able to contribute here in just a little bit, but I'm soaking it all in. Thanks.
Sounds good, Piper. I appreciate that. By the way, Piper was just on the podcast just a couple days ago, and it's live right now. And she is the cryptocurrency realtor down in Redondo Beach, next to you, Pierce. She might be attending the conference with us. And she's amazing at what she does. And we'll be talking about that here. Perhaps you can plug that a little bit later, Piper, about how to buy cryptocurrency directly and buy real estate, which is like never been done until like Piper's kind of done it. So that being said, Vijay also jumped in. You want Mr. Freeman? You have a comment there? I saw you go off mute. You want to come back on mute?
Okay. Yeah, I mean, it sounds good. I mean, the DST, I'm familiar with that in terms of, basically it's a alternative to the 1031, where you can, if you typically people advertise it as if you can't find the next up leg, then in the meantime, you could, defer it into a investment vehicle. But this is the first time I've seen it for crypto. And I guess my only question is, I guess the proceeds from sale will basically go into an investment account, and from there, I guess you could invest in all different types of crypto, or does it have to be related to real estate? That's kind of my question.
It's a great question. And Mr. Freeman, that's the number one most confused DSTs, because there's two DSTs. And we like to say we're the other DST, or maybe the better DST, and that the Delaware Statutory Trust is the one that you were referring to before, which is just another form of a 1031 exchange, in which it does act as an alternative to a traditional 1031 exchange. And for those who don't know what a 1031 exchange is, it's just a way to trade a investment real estate property for another real estate property, all tax deferred. I like to say the 1031 exchange is Blockbuster, And the Delaware statutory trust or the Delaware 1031 is like Hollywood video, right? So it's still in that family of 1031. One of the biggest challenges with the 1031 Delaware blockbuster way of doing things is it doesn't work for cryptocurrency. It doesn't work for primary luxury homes. It doesn't work for business sales. In fact, it only works for investment real estate. Okay. Plus all of the 45-day, 180, shotgun weddings that you're running around with your hair on fire, overpaying for cap rate deals that are like 3 and 4%, and the seller knows they have you right where they want you, right? But the cool thing about the deferred sales trust and why we think it's like Netflix is because it works for all asset types, including public and private stock, including, of course, cryptocurrency, businesses, primary homes. And it can save a failed 1031 exchange too. It's also an alternative to 1031 exchange. And the difference is it's an installment sale, right? And this is also, Mr. Freeman, why it opens up the ability to invest in multiple asset types, because we're not having to follow the like kind 1031 Blockbuster rules, which, remember Blockbuster, you had 3 days to return the video. The video may or may not be there, right? When you got there, if you didn't rewind it, you had another fee. If you lived in a cold place, you're driving and you have to get parking and walk through the ice or the snow. It's just old, right? It's tough. It's challenging, right? And so Blockbuster is now gone. And this is where the deferred sales trust comes in. So here's the magic now. Once the funds are in the trust, where would you like to invest them? I have a client. He's building 70 multifamily units, all tax deferred, from the business sale into the trust. The trust, in partnership with him, is building these units. So all tax deferred, pretty amazing. We have other clients that put it all into the stock market. They're like, I'm done with business and real estate. Just put me in the biggest companies with a very safe, financial, conservative portfolio of liquid investments, and they'll never touch any real estate or business ever again. We have others that are starting other businesses. We have others that are, going back into cryptocurrency. So others are doing hard money lending. And so that's the beauty of that. Does that make sense, Mr. Freeman? Or any questions or thoughts there?
Yes. I mean, it sounds like, it's probably oversimplified, but it sounds like a IRA rollover where you have an account, you can basically take the sales proceeds from a, real estate, I guess an investment, real estate, commercial transaction, and invest in almost anything. And then I guess your topic is, open that up. That opens it up to crypto. Is that right?
Yeah, you nailed it in a lot of ways. It's the deferred sales trust is kind of like a self-directed IRA. It's kind of like a 401k. It's kind of like a 1031. It's kind of like a lot of things, but it's its own way to defer capital gains tax. It can also help with some estate tax challenges. The other thing about that other client I was talking about, who's a potential client, who's looking at it for his public stock of Apple that has over $20 million of gain. Okay, he's single. Okay. And so his exemptions, he was saying, well, what's the ROI on this? He was asking about the fees. And I said, look, this thing is not even an expense for you. It's the deferred sales trust is literally an investment, because you're looking at all 25 million inside your taxable estate. If we sold, and he has a $12 million exclusion, I go, if we sold, 13 million or so into the trust, that's going to be like a $5 million immediate estate tax elimination, like literally just outside the taxable estate. So, I mean, unless our fees are, $2 or $3 million, which they're not, right? You're exponentially over and above the value of the deferred sales trust. And so that's something to look at as well. We have, and Mr. Jake Miller, by the way, is joining me we're on Clubhouse too, by the way. If anyone's Clubhousing, we're trying to get this dual thing going. So Jake, if you want to join the Zoom as well as the Clubhouse, we can start to rock and roll. And Pierce and Mitch and Piper and Mr. Freeman. Clubhouse is just like a cool way to chat and have, without having video meetings. It's a way to chat, but it's pretty popular. Anyways, another topic for another story. So
yep, for sure.
Mr. Freeman, did I answer your question there? I think I kind of lost track a little bit. Did I answer it?
Yeah, I think so. I mean, are there any dollar limits on the deferred sales trust, or are there any restrictions? Because it seems like, I mean, I haven't heard any limitations in terms of, the legacy investment into the target. And also, I guess this could work with deferring capital gains for real estate or any other investment too, right?
Absolutely. Hey, Mitch, you want to dive in on that one? Mitch, what are the limits? What are the good deal sizes? You want to comment on that? Mitch, we can't hear you. We can also pass it to Pierce if you think you're on. Hey, Pierce, why don't you cover that one? We'll get Mitch on the next one.
Yeah. So we like to say a million of gain and $1 million net proceeds into the trust. That's kind of like our
per transaction.
Yeah, per transaction, like our qualifying number there. If the thing is the pain has to be big enough, right? And it has to pencil. So at a certain point, it doesn't make sense if it's too small. It doesn't make sense to do it because they're not going to get the returns that they would. It's better to just pay the tax at that point and come back. But when you start hitting that million of gain and million of net proceeds into the trust, that's where it really starts to excel.
Let me talk about a couple of ways to do that. Go ahead, Mr. Freeman. Go ahead.
I'm sorry. So the million, that's kind of like that's the minimum. So it's $1 million or more.
You got it.
Yeah.
Exactly. So $1 million or more net proceeds or $1 million or more gain. Let me cover that real quick. So the deal itself, right, per transaction, unless you have two assets worth $500,000 more each, then you can combine those two. Like if you had cryptocurrency of 500,000 and then another business sale of 500,000, you can combine them into one trust. That's cool, right? But what we don't want is they have one single asset at like 350,000. You can defer about 50,000. We've gone through it like a lot, and we get through because we don't charge anything up front. And what we found is that by the end of it, after we do all the math and everything, they go, with the fees, it's just too expensive. What are the fees? Fees are about 1.5% of the gross sales price at closing. Okay, that's the legal. It's a tax attorney. That's a business partner who does that. And then about 1.85 to 2% on a recurring basis. Okay, and so given those fees, like Pierce said, the pain or the tax liability needs to be big enough, right? If it's big enough, the ROI can make sense, and that's really the key. Does that make sense, Vijay?
Yes, that makes sense there. And then I guess the recurring fee, that's just to manage the account. It's just like an account management. That's probably an annual fee, right?
Exactly. It's a recurring annual fee charged up front and then covers 365 days and then once a year thereafter. Right. That includes the financial advisor, which, by the way, he's just joined us from some exotic location. Jake Miller. He's the CPA tax deferral whisperer. He's a financial advisor. He's an expert in all things really real estate, lending, advising. Jake, how are you doing today?
No, Brad, it's a wonderful day, and I don't mind coming in and speaking from Mexico. It's a great time to consider foreign markets as well as have a little fun with the family, right?
Absolutely. And what place in Mexico are you in?
So we're here in Mazatlan, Mexico, in the state of Sinaloa, and roughly 76, 77 degrees. All the locals think we're crazy because kids like to go play in the ocean and get wet, and for them it's cold. Anyway, it's a good time.
Awesome, Jake. And for our listeners getting to know you for the first time, by the way, Jake and I are going to also be in Colorado speaking. I'll be speaking at the Best Ever Conference. I'm going to try to sneak Jake on the stage if I can. I don't know if I'm going to be able to do that, but he'll be there live in person, educating, talking with you, networking with you at the Best Ever Conference with Joe Fairless, February 20th, 24th, right around there. You can go to capitalgainstaxsolutions.com. We got a discount code there. It's literally, I think, the best I've never been there yet. The best commercial real estate conference in the U.S. that like the one you like have to go to if you want to be in apartment buildings and syndications and doing deals. Pierce, of course, you're invited. Mitch, you're also invited. Mitch is out of Colorado. If you can get there. But Jake, do you want to talk a little bit about how to make the deferred sales trust an investment rather than an expense, right? Talk to me a little bit about potentially getting, selling high and buying low, right? How to offset the initial legal fee with as a tax write-off, and talk about just the overall time horizon to be able to make this money making trust work for you.
Very good. So those are kind of three different things, and I'm going to add two more. So just to begin with, I, from various associations that I've served on in the financial advisory sector, as well as in the tax and accounting realm of things, it's important that we help people from a moral and ethical standpoint know what their options are and help them make good, conscious, deliberate decisions about how they're moving forward with their finances. And ideally, we're helping them. And like I mentioned, I've been a president 2 different times of NAIFA, National Association of Insurance Financial Advisors, where for free we would have our monthly meetings, regional, statewide, different things like that, just helping people know what's available to them, how they can help their clients, what are some of the biggest issues that are facing them today as financial advisors in their practice, as well as where they can probably take it to the next step. And also within some of these accounting and tax practices, I had the great privilege and honor of helping presenting to hundreds and thousands of CPAs and EAs that are firm owners from across the country. And fielding a lot of their questions when it came to financial products. So there's this end of year movement typically for clients and their money. Where can I move things, get a deduction, file for an exemption, be more tax efficient for my fiscal, standing and enter into the new year in a better position, so to speak. And so the best practices, the good, better, and best, as well as, how do we do this right? So who am I? I guess that kind of just tells you a little bit about who I am. I work well with other professionals. Brett and I always invite people to bring their financial advisors, their estate planning attorney, their tax attorney to come to the table, and let's have a very professional conversation and see how the Deferred Sales Trust might fit and might work. What are the myths, as well as what are the solid facts and the truths? Where are the source documents, and how can it and how should it make sense? At the end of the day, the Deferred Sales Trust, for me and how I like to present it, it's a tool, a financial tool that can make a lot of sense should an individual first and foremost have an eligible transaction. Do they have a transaction, as Pierce was mentioning, that is sizable enough that there's a pain point involved of, my goodness, I've got this asset and it's this big and I'm going to sell it. And after I sell it, I have to pay taxes and everything else. And now my reinvestable asset that once was this big is now this big. And I only have this much to move forward with. With the Deferred Sales Trust, that doesn't have to be the case. You're allowed net of attorney fees rather than net of taxes to take the proceeds of that sale at arm's length through the Deferred Sales Trust and other joint ventures and different ways that we encourage people to reinvest those funds moving forward, so that you can take the entire piece of the pie, again, minus the attorney fees rather than minus taxes, and reinvest it so that you can continue to defer what would normally be a taxable event forward into the future, because that Deferred Sales Trust has moved in between you and that transaction and has kept it from you at arm's length, from you receiving a contractual receipt of those funds, as long as, now this is the second thing. I mentioned the first was you have an eligible transaction. The second is that your intention is to continually reinvest those funds, not to take them personally, not to use them for personal stuff, but to continue to grow your overall net worth and reinvest in other assets that help take, your current standing financially and improve it and increase it. And it does it in a very tax efficient way. How do people get out of it is an often asked question. And there's a number of different ways that people can get out of it. It actually works very well with a number of estate planning tools that people do. We've had estate planning attorneys change their mind on recommendations they've given their clients, rather than diluting the valuation or decreasing the valuation of an estate for estate planning purposes. They have actually opted to, let's sell at the very highest price we possibly can and take the new net proceeds, and through a joint venture relationship, have a reset on depreciable assets, and let's have a reset on different things that we can invest in as far as moving things on to the next generation as well. And so it's an amazing tool that is very flexible. It's customizable. It's not a cookie cutter program. It does require some individuals like Brett and I and everybody else here at the table to help and assist clients in making decisions going forward with the deferred sales trust and how it's used, so that it's not abused and so that it continues to carry on the desired results of our clients.
Awesome. Thanks, Jake. By the way, if you're wondering too, can you take funds from the trust? You can. You'll just pay tax, right? Most of our clients are taking some interest-only payments, and they'll pay ordinary income tax on those. They'll get a 1099. Very simple. Report to their CPA. Like once it's set up, it's really pretty simple. And then as a trustee here, I provide the trustee services, I'm making sure that it's staying compliant, invest it properly, as well as filing the tax return and making sure all of those things are staying in place. And now I'm not the financial advisor. We work with folks like Mitch, folks like Jake, to perform those services. But as a team with the tax attorneys, we're all helping to perfect this. And what you'll learn from this, and part of why it goes to like, well, why haven't I heard about this? Why isn't everybody doing it? Is because it literally takes a team of professionals to execute this precisely every time, right? I mean, it goes back thousands of closes, 25 years, over a dozen no-change IRS audits, but it's not just like setting up an LLC and be like, or like a living trust and be like, oh, okay, got that and I'm done, right? No, it's an ongoing business trust, and think of it like you're the CEO or like the chief executive officer or the chairman of the board of the bank or the chairwoman of the board of the bank, and I'd be like the COO, and Jake would be like the CFO. And it takes your approval for these investments, for distributions. And when we all work together, we can keep the integrity. Again, not unlike an IRA company or 1031 company, right? That has a custodian or a manager over the account. And that you got to have these professionals executing this. But it is proprietary, it is protected. So that is the deferred sales trust. So I'm going to open it back up for Mr. Freeman or Mr. Bloom or Miss Piper. If you have any questions, thoughts, curiosities, you can feel free to unmute and ask those questions. And we would be happy to hear from you. I'm going to call on Mitch first. Mitch?
Yeah?
Got anything?
There are so many things, and Jake really helped put a lot of this in perspective for me, and so I appreciate that. I'm still learning about this. I'm still in the training wheel phase, I would put myself, but some of the questions I have is around if you have a really high, let's say you've got $100 million deal, obviously this is going to be a multi-generational thing. You have way more flexibility with this than you would with a charitable trust. And maybe Jake can address this. I don't know. With a charitable trust, you don't have as much flexibility. And with the DST, you would have the flexibility after the trust is established, after the deal is closed, and the proceeds are distributed. Would the trust give you more tax benefit, siphoning off part of the proceeds to charitable causes?
Jake, do you want to cover that? And before you do that, real quick, just so you know, if you have a $100 million deal, there's no deal too big. In the very, very beginning, we were talking about the DST 1.0, which was $5 million per person per year, and that's what we did for our Bitcoin client who Jake and I's Bitcoin client had 50 million of Bitcoin. She could have done it for all 50 million in 1 year using the DST 2.0, as well as the DST Plus. She decided not to for a couple of reasons. But Jake, do you want to cover kind of the CRT versus the DST if someone has $100 million of Ethereum or Bitcoin or whatever, and they're saying, should I do the CRT versus the DST?
Very good. Okay. So a couple different things there. Again, first requirement is they have an eligible transaction, right? And then second, that they wish to reinvest the proceeds of that transaction. Now, diving deeper in between the lines there, we have some of these desires and concerns. Some people, Mitchell, as you've probably met with, they like to just pay the tax and be done, right?
Right.
Pay the tax and be done and move on. And occasionally, they may have some other tax strategy opportunities that would make that more beneficial. And sometimes charitable giving plays into that. And I'll say that just as a big disclaimer up front, so to speak. Now, generally, the type of clientele that is a really good fit for the Deferred Sales Trust is the type of clientele that would rather reinvest the $1 million rather than the $800,000. Or, depending on their tax situation, might be something more dramatic than that, right? A lot of times people might do a Deferred Sales Trust and then a few years down the road have a very tax-friendly environment through new legislation, or because of a very large business loss, or because of some other charitable opportunities, and they may decide to take a very large distribution from their Deferred Sales Trust at that time. One thing to really take note of is that a charitable strategy is offsetting oftentimes a very large piece of the tax, making your tax burden more palatable, easier to handle and take advantage of in that moment. Whereas the Deferred Sales Trust is we are sort of with permission saying that we're not going to take the proceeds yet because we want to invest the entire piece of the pie and not incur that tax burden yet. And so we're pushing it down the road. And so from a flexibility standpoint, the Kratz and the Krutz and all of the other charitable opportunities there, there's even people that do a charitable LLC. There's people that do a number of different things, right? We actually help people with a phenomenal strategy that, it's kind of similar to Fidelity's Arts and Antiquities, where you can get the fair market value of the current asset that's being donated rather than what was basis and everything else, right? Mm-hmm. But there's a big difference here. It's, I'm offsetting or diminishing a tax liability versus not incurring the tax liability now. So if everything is happening this year, and this year is an optimal year to take on that tax burden because it's going to be something less than the highest tax rate, it might be beneficial to use a charitable strategy now, or it might be most beneficial to do the Deferred Sales Trust. And at some point in the future, when it is more optimal to pay the taxes, then implement part of that same charitable strategy, but down the road in the future to offset that. What the Deferred Sales Trust does that is perhaps of most benefit to some of our clients is it gives them the power of timing. It lets them choose when to take that distribution and how much of that distribution to take out of the Deferred Sales Trust. And then they can decide, should I take this personally? How much of that tax I want to incur based on other strategies they're going to implement. A lot of times we don't do only a Deferred Sales Trust. Now, for more information on a strategy like this versus the DST, Brett actually has a very phenomenal video on this. And Brett, where can they find that video?
Yeah, so you go to Capital Gains Tax Solutions and search on YouTube, and then you can kind of search CRT versus the DST. And you can also just keep coming back here on Fridays and hear more and more about this. And of course, if you have a big deal, you can schedule a time with Jake and I to go over this. I think Jake's at alphamarktax.com. Is that right, Jake? Yep. Or Capital Gains Tax Solutions. Yeah.
Yep. Alpha Mark, I was just going to say with a PH, right? Sometimes people just throw in the F, whatever, but yeah. alphamarktax.com, there's a little booking tab and an 800 number there for everybody.
Yeah, and we're happy to go through on a one-on-one consultation. I do want to add one other thing, though, for the CRT versus the DST, in that although it's called a Deferred Sales Trust, some people don't realize that there's a DST Plus or Deferred Sales Trust Plus that is different than the traditional installment sale that actually eliminates the estate tax. Okay, it moves the funds outside the taxable estate, which the CRT does as well, right? It can, because you're giving it away to charity. So those two things are even. And most of the time, or a lot of the times, for folks who are looking at the CRT, that's one of their biggest things. They're very charitable giving, right? But oftentimes with the deferred sales trust, people are saying, I'm charitable, but I'm not 100% charitable, right? I don't want to irrevocably know that all of it at close of when I die, the end of my life, that it's going to go to charity. I want to know that I could still keep a lot of it for my family, right? And we say that charity begins at home. And for multiple generations, for kids' college education, grandkids' college education, just on and on and on, right? You can build that. Now, can you receive funds from the trust? Yes. And as you receive those funds, can you then turn around and pay that to charity? Yes. Which I would also argue is a very keeping the control in your family and your values, because let's face it, like, leadership changes, especially decade by decade, and your values today for the charity that you want to support, and maybe when you pass away, they could change, right? And at least with the deferred sales trust, you can keep the income coming to you and or your heirs, and then they can go ahead and pass it to the charity, right? And so it maintains that what's called accountability of those funds, and or to be able to be on those charitable boards to say, hey, we are giving to you, and we can stop giving to you. We can go to another charity that supports our values. So that is also another reason why a lot of folks are choosing the deferred sales trust versus just the CRT. That being said, we are up against the 13 minutes left here. Piper, I did say before that if you're still there, she's on mute, that I was going to give you a chance to talk a little bit about what you do. I thought it was so fascinating, and it fits very well for the cryptocurrency DST mastermind that we're in. So if you happen to be available and you want to unmute yourself and maybe even go video so we can kind of hear a little bit of what you do. I'd also like to have Piper back on in a few weeks and kind of feature her as the guest here on the DST Crypto Mastermind, so that she could talk about what she does and how she does it. Basically helping people buy investment real estate or even regular real estate using cryptocurrency. So Piper, are you there? I'll try one more time. If not, I know Ryan had his hand. Oh, Piper, you're there.
Oh, I am here. Yes, you don't get video today. Sorry, it's just
okay,
not
no
that
problem.
day. But yeah, no, that's the part of my business. I mean, obviously I do traditional real estate as well, but I just kind of fell into it. And yeah, I help investors purchase with crypto, or at least educate them on what their options are. Because nowadays, I said in the podcast the other day, we have many more options today than we had 5 years ago. And I also help sellers decide, do you want to open this up to crypto investors? Do you want to take crypto at the end of the day? Do you just want cash at the end of the day? So I do a lot of consulting. Right now, we're trying to figure out how to NFT $100 million estate in Orange County. So I've got my hand in a lot of areas right now.
Excellent. Love it, Piper. And we're forming a strategic alliance as well as we speak. We're
Yes.
exploring all that right now. And so look for more and more content coming with me and Piper, and perhaps even her business partner, Susie. By the way, Piper's a part of EXP as well, part of the family with me and Pierce. The Jake is soon to join. And so appreciate you, Piper. Thanks so much. And do you want to take me up on that offer? Maybe in a couple weeks, you come on and we'll have the video all set up and we'll highlight what you do and how you do it. Does that sound cool?
Absolutely. I would love that. You
Awesome.
betcha. And I'm going to have you on my podcast as well.
Awesome. Thank you, Piper. That being said, we're pretty much out of time here. I'm wondering if Pierce, Mitch, or Jake has any other thoughts or questions. Or Ryan had his hand raised. Ryan, what's happening, brother? Are you still there?
Hey, yeah, I'm here. Can you hear me?
Yes, I can, sir. How are you?
Okay, so I'm doing good. So I was just kind of going to point out the fact that diversification in the crypto industry is probably the biggest thing that drew me to the Deferred Sales Trust, because, like, I don't know, one day your portfolio could be super balanced, and then the next day one of your coins shoots up like 500%, and it totally throws off your whole portfolio, the balance and everything. And so having that ability to kind of move it around without having to worry about tax, that was really what drew me to the DST. And yeah, you guys were kind of mentioning how it also gives you that freedom, unlike the charitable remainder trust that you're locked into it until you die. So I just wanted to point that out. Like, diversification in crypto is super, super hard to find. And being able to avoid taxes within that is super important.
I love that, Ryan. You know, it'd be good to have you on the podcast to talk about that subject, because you do know a thing or two about some NFTs and some cryptocurrency. And Ryan, if you're open to that, you let me know. And he's also in the real estate world. He's not quite with EXP yet, but that's okay. We're working on him. But Ryan, it's great to hear your voice. Happy New Year and Merry Christmas, my friend.
Yeah, thank you. No, I miss you guys. It's been busy though.
Good. We got to catch up after the new year. So that being said, do you have any particular questions at all? And then I love that. That was a good comment too. I like comments too. But anything else that you have questions on that we can answer real fast?
Not at this time.
Okay, cool. Thanks, Ryan. Hey, Mitch does. Hey, go ahead, Mitch.
Real quick. So you can take crypto and buy real estate through the DST, right?
Yes.
So with that being said, does part of the proceeds from the crypto have to be diversified outside of the real estate, like a 20% amount, or how does that work?
Yeah, so we do want to keep some liquidity for the trust. So for example, we did the $5 million Bitcoin case Jake and I just did.
Mm-hmm.
And in fact, she's going to do another 1.3 million here in the new year in the next couple of days, probably. Mm-hmm. And what we found is, in what the tax attorneys found over the years, is that when people want to go to illiquid assets, such as a business or real estate, that we want to make sure we keep the proper amount of liquidity in the trust, into stocks, bonds, mutual funds, investment grade securities. And so it's exactly what we did. Now for her, she's very entrepreneurial, still in a very wealth creation mode, wants to be active in real estate. In fact, she would not have done the Deferred Sales Trust if she couldn't have used portions of the funds to invest in a brand new startup with her business partner. That's the whole reason. Besides, of course, the tax deferral, right? She used the Deferred Sales Trust. And so for her, 80% basically of the total amount has gone into a new business venture with a partner, okay? And so we have a proprietary way of doing that. Happy to share that once everyone's under engagement agreements with us. But yes, and then the other amount stays in securities, investment grade securities at Charles Schwab, where Jake manages money. Mm-hmm. And so they have 24/7 access to view the funds online. Now she's selling an additional 1.3, which a lot of that will go into the securities as well. Keep that balance. So does that answer the question?
What is the percentage amount?
Basically, it's 80-20. 80% can go into illiquid assets. Right. 20% can go into liquid assets. Okay.
Okay. Cool.
So that's a great question, Mitch. Yep.
All right. Thanks.
Mm-hmm. All right. Well, that's up. We're up against the hour. I want to thank everybody for watching this. And if you stayed through the entire almost hour here, we really appreciate you, and want to invite you to join us next week, every Friday at 10 a.m. Pacific Standard Time, 1 p.m. Eastern, by going to capitalgainstaxsolutions.com, and you can register for free to be a part and get the exclusive link here. You can come answer your questions, and we want to take this time to thank you for being and listening, and we want to encourage you to remember that not having a clear plan is the enemy, right? And when you go to sell highly appreciated assets, you want to have a clear plan. And using the Deferred Sales Trust, we believe, is the best way to defer capital gains tax and still have that diversification, that liquidity. Not have to give it all away to charity, move funds outside the taxable state, buy investment real estate, all tax deferred. So you can defer millions of dollars of capital gains tax. And so you can create and preserve more wealth for yourself, for your family, and or for your clients. If you're an M&A advisor, business broker, CPA, financial advisor, luxury realtor, we want to invite you to connect with us, so we can show you and help you grow your business. Again, go to capitalgainstaxsolutions.com to connect with us, and we hope to see you again next week. Please rate, review, subscribe if you're listening to this as well on any of our podcasts or other channels. Thanks, everybody, and we will talk